Money Monday, presented by Oklahoma Central Credit Union.
It's Money Monday, a segment here at 4 o'clock where we talk about easy to understand ways to navigate our finances. We do it with our good friend and financial expert, Paul Hood from Hood CPAs. Paul, how are you today?
I'm magnificent, Brian. How are you?
I'm doing well. Thanks for asking. Let's jump right in. We have three good questions today. We start with Brenda. Brenda wrote in this week asking you, what is considered taxable when it comes to employee gifts?
Well, Brenda, unfortunately, anything your employer gives you is income, is considered taxable income, whether it's a gift card, cash, a little bonus or whatever. The only way it's not taxable is either called a de minimis non-taxable fringe benefit. For instance, they bring donuts and put them in the break room or that kind of stuff. Or if it's as a reimbursement as a part of an accountable plan, meaning you go on a trip and you have travel and you turn in your receipts, the company can reimburse you for that. But for the most part, if there's an employer-employee relationship, there is no such thing as a gift. Now, it happens, but it's by letter of law, there is no such thing as a free gift between an employer and an employee.
All right, how about this one? Schreier says, I moved to Oklahoma last year, but I still work virtually for a company based in New York. Do I have to pay taxes in both states?
So that's a tough question. It is actually fairly simple, but the problem is a lot of employers don't do this right. So what happens is if you're an employee, you pay taxes on your wages in your resident state, which in her case would be Oklahoma. If she's a full year resident, the year in which she becomes a full year resident, and you pay taxes in the state where you earn those wages. Well, if she lives in Oklahoma and does not go to New York, she should not have to pay New York taxes. Now, what my experience is that New York employer will probably withhold New York taxes and report the income to New York. And in that case, you do. You pay taxes in both states, take a credit in Oklahoma for the taxes paid in New York. But really, the employer needs to fix that and withhold Oklahoma taxes, not New York.
All right, that was a really good question. And our last question goes to Dalton. Dalton asks, can I run the income from my lawn business through my construction business? What's the answer to that, Paul?
So, yeah, you can. It depends on who owns the business. For instance, if you've got a sole proprietorship, the business really doesn't exist. It's just you. The only reason to separate the two is if you want to measure profitability for the two companies separately. Or if there's a legal reason you want to separate, if you get sued in one business, you don't want the assets of the other business being at risk. But other than those two reasons, yeah, you can.
All right, just simply name it Dalton Lawn and Construction, and that would solve the whole problem, right? Just
solves the problem. There you go.
All right, all right. Paul, great to see you today, my friend. And if you're watching right now, you have a financial question you'd like for us to chat about next Monday, you can send your question in right now by email to moneymonday@griffin.news.